The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman on this Tuesday, the 21st of January. Just a couple of clicks and I'll be ready with this particular one. Okay, so what we're looking at here is the Dow on this Tuesday, 21st of January, is up 240 points at 43,727. Very strong leg B, and the 9-period moving average crossed positive 2 days ago. The stochastic is now finally over 80% at 84%. The MACD is expanding. The relative strength is starting to improve a lot. So that to me says that I can now, and taking a bit of a chance, I have to wait for the end of the day. But if this is still holding very strong, I'll be able to put an up arrow to say that there should be at least another 2 peaks after this one. So that, let me just do this because we haven't done it for a long time. I haven't needed to. Let me just show you in the Chapman wave methodology what the prerequisites are right there. Okay. Oh, but you got to click on it. Click. There it is. Try to identify the lowest low bar using different Chapman wave techniques. If you get that, then you count each successively higher peak, alphabetize them A, B, C, D, E, F, G, with uppercase on the way up and the lowercase on the way down. The objective is to get an upgrade from a buy signal to a buy mode, and the implication immediately, once you put that up arrow in, it implies that there should be at least 4 higher peaks. Peak A is the first, B is the second, C is the third, and D. Then other things can happen. It can go much higher. You can have a Chapman wave instant restart, just could have the biggest pullback, but we'll see what happens when we get there, if we get there, and we haven't got the upgrade just yet. Meantime, back at the ranch, the weekly held a very good support at 41,844. So a week ago, I'm going to go through it again. I went through it, all those different indicators. Maybe I'll just do this one quickly. I set on the Dow. Let me just double check. INDU. Yeah, it is. So let me just open this up, expand it. This one here, there are a couple of reasons that why I felt so strongly, and then I had the conviction of the Chapman wave inside track propellant zone being held in this chart of the Dow. It's yellow because it's got the Chapman wave dark news index notations, where I always say that there's a chance of an internal high and a residual high. We got that right there on the 29th. I thought that peak C would make a D. It didn't, but it came tumbling down. And then I said, I don't think that these two very close bars on the low, trough A and trough B, the troughs on the downside, peaks on the upside, are going to rally sharply enough. So I said, I think that the second one is probably going to be an inside low. That's the internal low. And that we have to wait for maybe a lower low. I wasn't even sure. And then we just snapped it once on that day that went to, on the 10th of January, we went down to 41,877. And the next day, that was the Friday, on the Monday, we went long prior to the opening. Why? Because I had a whole analysis on the volatility, and it's just a lot of things said, at least you can, this is a good opportunity to go long, and it was sort of a small aggressive long back into our Dow chart, because if this does work, there are 2 things. And when I was being interviewed by, that was the Monday, that's the Tuesday. On the Tuesday, I had said to Jacob when I was being interviewed that either this is going to be a V-shaped pattern where you just can't get in because it just keeps going higher and higher. Every day you think you're going to wait for a pullback, or there's going to be it's going to be a pullback, and that's going to be the big test. And that means can't call it a low, the low right now, just a low. Even now, I can't call it the low. It is just it's a fabulous, look at this trend line here. The trend line that was fantastic inside track, propellant zone, then got broken, and now it's going to be the very first opportunity to talk about it as if it's going to be a resistance zone at 44,000 to 44,070, and it's a rising trend line. Okay, this is finished with that. And so the day is young. We're up 280 right now in the Dow. The weekly chart held beautifully. That 9-period moving average never went pink. That was another reason why I said I have to believe in this technique, because I use it all the time in the futures. When the price goes below the 14-period moving average, when the 9-period moving average goes pink because it's under the 14 and the price goes down, that's negative. But if the 9-period moving average remains green as the price for even this, for 1, 2, 3, 4, 5 weeks has been under the 14-period moving average, and yet it keeps, and now it's closed sharply higher, and it never went pink. So to me, this is just a sign of some kind of internal strength that I use all the time as a technical indicator. So that's a good sign so far. But wait a minute, you've got other indices. So the Dow right now is up 0.54%. The S&P is only up 0.22%, up 13 at 6,010. And look, it's starting to pull back. And that's why I said this is called the Chapman Wave Inside Track Propellant Zone. But if you've got to be far away from it to be really a propellant. So it's coming back to test it. If it closes in the next 2 days under 59.90, that's going to be a disappointment. It'll still be a leg A, but the stochastic's under 80%. It's only at 66%. Turns out now, where the Dow is the weakest from that December high, with the IWM, the Russell 2000, now in just a certain sense, it's the strongest. But it's also because it has the deep cyclicals as well in the, not that many, but it does have more cyclical touch to the Dow 30 than the others. All right, let's get back to the markets here. QQQ right now is down 0.22%, down $1.20 at 520.54. A little bit of a failure pattern here. And this is the whole thing. Now, I'll get into it later. IWM, the Russell 2000, is giving back some of the gains. It's up $1.69, still acting quite well. Up 0.76%. I mean, that's up 0.75%. 227.13. So that to me says that there's still some internal strength, and that is very good. We've been long the IWM for a long time. Let me just see. Right, did I put it in? Okay. So let me just go to the from 203 in the IWM, and let's just go here. And that was back in early August, I believe. Right. So, let's go on. So now we can go to the SMH. It's very important. Semiconductors right now are up 0.34, up 0.23, up 0.13% at 258.65. Good action, but that 263.58 recent 2 weeks ago, that high, that's going to be important to break above. I think it can, but right now it's just pulling back from a nice gap to the upside. It went all the way to 261.10. Now it's down about almost 3 points lower, or 2.5 points lower. Watching it closely. Wow, that was quick. Now I want to go to the gold. Gold is up 2 at 27.51. Let's go to silver. Silver is up 0.22 at 31.36. A bigger percentage than gold. Always they play catch up. They play tag. One leads and the other one follows. I'll be right back. Basil Chapman, Dow's at 241.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
So before I forget, what I wanted to show you is, although I got United Rentals chart right here doing very nicely, I wanted to show you this. And it's always, every time I go through this, it's always a little surprising to me because the theme usually is that the markets do better during Republicans. But look at this. This is not bad, huh? This is the Biden rally since his inauguration 4 years ago, and it has the Dow up from 31,000 to 43,487. It's about 40%. The S&P is 3820 to 5996, up about 57%, and the Qs are 313 to 521, up 66%. Not bad, huh? So look, and Trump, I didn't do the actual percentages on Trump. I showed it before that each president has had pretty good gains. Bush 2 was really the weakest. So Obama was very strong. It's just fascinating to me that all we want is, if you're in the market, you got to forget about all the words. You got to forget about all your internal gut feelings, etc. Just look at the charts and say, where are we going? Is it going up or down? For instance, a week ago, we were looking, I had a question about coin. So this is Coinbase Global Inc. It's in the Bitcoin area. And it was right here. So a week ago, it was, we're talking about the 10th, right? So that's the 13th there. So I was just saying that it's not that great a chart. It isn't even close to the chart pattern of Bitcoin, which is the superior one chart-wise, and that. But even there, I said that's the daily chart has pulled back a lot, but that weekly chart is so strong. I can't do anything about it. We've been long via the IBIT, that's the iShares Bitcoin, and I just don't want to touch that. It's done really well, and I'm staying there. And so the question is, so what happens now? Well, you look, Bitcoin has gone from a low on the 13th of January of 89,525 to yesterday. Was it yesterday? Yes, yesterday's high. No, 17th. That was on Friday. That's the BTC daily. Friday high of 106,575. And yesterday's high was a little low. It went to 105,630. So right now we're down 1,600 and 103,680. So I just wanted to point out that in the last, look, if you were looking at, let's go to this. We can go to any of them. I'll just go to the Dow. If you were looking at the Dow going into that low right there, you'd say, look at that. MACD's bad. Stochastic's down in the 20% area. The relative strength index is not very strong right there, that gray line. So I used other techniques to at least step forward and say, we're going to put that position in. We'll have a little bit wider stop than usual. And if it takes off, we'll just tighten everything up. Well, I had to use other techniques. I couldn't do it based on this, even though there was a divergence between the low of 42,146 around about the 16th or 18th of January and the low that was made in the stochastic and the rising lows that remained. That to me is a positive. So yes, there were other techniques. I just wanted to go through to say at that particular point, coin was acting much weaker. And even now, coin has dropped $18 today at 276. So I'm just saying we're in an area right now where I want to remain with the strongest positions in our portfolio, which we still have, these core positions. Some of them have been long-term, some of them just recently in August, and others that we've added to. And the reason is that on the big decline, I wanted to see like a sieve. I wanted to see what fell through the cracks and what held. And the ones that held are the ones that had the strength that should, if there was a rally, do well. And I think it's telling you through the marketplace that that whole area of, let's go to Amazon. Amazon, nice rally today, up $2 at 227.95, broke that down channel. But it's not at all-time highs, but look at that 233 round number high on the 16th of December, and it's so close to getting there right now. 230, let's call it 231 is a high today. It's just an eye blink away. So I think selectivity, for instance, that's acting quite well. And Microsoft is holding okay, but today was an opportunity to say, you know what, with everything that's going on, especially in the sectors that are being favored right now and sectors that are not being favored, this is an opportunity for a stock like a Microsoft to prove itself. And at this particular point, I just say it's just okay. And that's where we've treated it. We got in at 338. Then we had trading positions and we had core position. We haven't touched that. That's still looking good. And I just want to hold it. But I don't think it's in the leadership position right now. Now we get to something very interesting. Why? Because look at the XLF. This is the S&P Select Financial Spider Fund. Strong leg A. Made a peak G double top at the right there on the 27th of November at 51.62. And 51.57 the next day, so that Chapman wave 2-bar reversal came down very sharply to the low. Monday a week ago low of 47.66. Very strong leg A to the upside. That is a big positive, and that's saying to me that maybe the yields. Two things I need to think about right now. Just let me get to the theme that I was talking about. So the S&P 500. Has done very nicely, but the 6,099.97 high of December the 6th, we haven't got there yet. But what I'd said is those 500, it's one thing, but I want to see the Russell 2000 start to play catch-up. So on a percentage basis today, the percent is a better gain than the S&P, but it's still way down. And I want to see this period, January into February, not break down in the IWM, but to break to the upside, to get to the 230, 233, 237 area. That to me would be a really good sign. Now, here's the relationship that I was trying to point out. The XLF, that's the key, the money center banks, the S&P Select Financial Spider Fund. It has Berkshire, it has JP Morgan. These are the heavies, right? Doing very nicely. I want to see the KRE. that is the regional bank index, start its move. The relationship of S&P to the IWM is 500 to the 2000. I'm trying to treat it as if that's the relationship that already make for a big bull market, at least in this first quarter of 2025, if we can get some traction to the upside, and that's going to be very, very important. So at this particular stage, we've got, let me just check. Yes, we've got the KRE up 1.58%, up $1 at 64.06. And it's one that we've been in and we've been out of, and we're back in it. I just want to see this, and this could be wrong in the sense that this is the phase where you want to get the big winners straight away. This is kind of a slower mover, but it's part of an organized portfolio that's in all these different areas at all different price points. And I think that this, for me, is, I wanted it for a while, and now let's see if this is going to work. The regional banks need to move. I'll be back in a moment. Dow's up 260.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
I didn't know that. EKS in the Tiger YouTube. Is that? Let me just check. Yes, Basil. So do similar chart on wars. U.S. involved in versus stocks during peacetime. That's interesting. I didn't even know that there was an ETF called WAR. WAR. So WAR ETF. Whew. This is an IPO, so you really can't do much other than say it's in leg B right now, in the daily, leg A in the weekly, not even a leg A yet in the monthly, because you have to make a higher low before you can start the wave count. All right, but just look at this. So if you look at RTX, that's Raytheon. What a big move today, and I featured it the other day for when I did my market overview. This was actually, I should mention that. I should have mentioned it right away. I did a market overview on Friday that I had. It's really more a webinar, because I was looking at the stocks that could benefit right now, the ones that really show some strength. And it was an hour and a half, I believe, and it was like a webinar. So if you are interested in it, it would be the same as if I had announced that I'm doing a webinar, because it would be a month free of my newsletter, and you'll be able to go to all my other webinars and these different techniques. So look at this. I spoke about Raytheon, I featured it, and I said we're going to see what happens next, because Raytheon might be one of the winners, because that's really needed. The dome, that particular. I would just call it a technical defense system. So here we are, leg A in the daily chart. So it's up huge. It's up 2.5%, $3.23 at 124.34. Now, when you go to General Dynamics, it's a nice candle today. A very, very nice candle. If you go to LMT, which is Lockheed Martin, very nice candles. Now, I don't know why they're spiraling like this. Is it because of Trump, or is it if there's going to be peace, you wouldn't expect this to happen? I just know it's very confusing. So I'm just saying that this is not a full week of trading, but going into Friday's close, into Tuesday's close, I think is going to give us an incredible amount of information, which is the reason why I didn't want to get carried away and to go into some of those stocks that were absolute great winners, just arbitrarily, just because they were winners. I wanted to go into areas that could benefit. Let's just say that we get yields to come down a little bit finally, right? So the TLT is up 76 cents at 87.95. Leg A, nice move, not great, but it's a nice move. And you did this dreaded H pattern where you went, this is the 3 bars underneath the previous high. That's not good. Now you have to have a whole new buy signal in the daily chart to help the weekly chart. So all I can say, it's a work in progress. But wait a minute, I spoke about this. We did quite a bit of work on it. In fact, I said that this peak D in the TBT, that's the inversion of the TLT, this is the ultra short Lehman 20-year Treasury bond ETF, made a leg D, went to a Fibonacci retracement area. It did in the weekly chart, not exactly to the number of bars on the left and the number of bars on the right, but to the candle that I chose, and the Chapman wave inside wedged. Why is that pink? It should be green. Green, target the repellent line. It did it perfectly. It went to a B because it went above the previous highs to 38.98, but 38.68 was the high back in April. So that double top says there's a chance now that yields could start to pull back. My suspicion is at a certain point they will hold support. That is the TBT. This is like a yield right now that you're looking at. 38.34 is 36.34 is 3.634. But what's really important about this is that you've got 35.31 as the real last on the weekly. The black 14-period moving average is kind of the last support level before it starts to get a lot more serious. But this is a good sign. And I think that's the reason why we've got J.P. Morgan moving up nicely here, making a new all-time high at 262. Oh, all-time high, 262.15. Talk about all-time highs. How about this? Triple M comes out with great earnings, and it spirals to not an all-time high because that was way back in It's had splits and all sorts of things since then. Was that the high? I think it was. Peak D right there, January of 2018. So that was 6 years ago, right? 7 years ago. And it's pulled back very sharply since, right? What did I say it was? Darn, I gave you the date and I forgot to tell you the price. The price was, because it's spun off some things after, I'll talk about that as well. 217.19 drops down to 115.04. Was that pre-split? 95.35 back in March of 2020, runs up to a peak E, pulls back sharply in the 170 area, makes a new low, and now it's at a beautiful move to leg D, and it's 150 round number high today, and it's pulling back. It's now at 146.47. These round numbers are amazing. So there it is. But I've only got it as a leg C in the weekly chart, so it should be taken out at some point soon. So I got to that via what? I moved away too many places. Oh, we were talking about war. This is the ETF. So I don't know. All I can say is that there's been a bit of a recovery in those war stocks. In the war, let's call them the defensive related stocks, defense, and we're going to be watching them very closely. So thank you for pointing that out, EKS. I didn't even know that there was actually fix it. Yeah. Okay. The other thing was GDX. So this is very important because GDX is the gold miners. So this is in a leg D. Remember, Chapman Wave, we did this before. You want to get a buy signal that goes to a buy mode to at least a D. D's where other things can happen. But look, 89% on the stochastic. MACD's expanding. The price, the 9-period moving average is strong. So this is a very good move, and it suggests that the GDX, the gold miners, market vectors, gold miners ETF, should retest the 39s. That's the last peak D. We'll be watching that. But I don't like a failure at peak D. Under the previous D, it says, a little bit of work needs to be done here because you should have been more like a peak C through that D. So this just says it's a work in progress. A question came in about the dollar. Yeah, the dollar. So it made a peak F about 2 weeks ago at 100 and, I forgot to put the price in, 110 point, was that 30? 110.18. So let me type that in. 110 point, it's had a fantastic move. It deserves a bit of a breather. It's a peak C in the weekly chart, so it should still go to a D. So yeah, it's fine having a bit of a breather. Oh, there's the break. Dow's at 287, S&P's up 24. I'll be right back. Basil Chapman. Some of you want to look at, I wrote it down, I'll look it down. Boeing. Boeing and GE. I'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn. and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi, folks. So, a couple mentioned in Tiger YouTube something about uranium. Where did it go? NNE. NNE is trading at 28.31, up $3.60, up 14%. This is a nuclear energy. And I just look at this chart here. Let me just get a little closer. Nano-nuclear energy. So that's the name of it. Nano-nuclear energy. So this is a little different to the others. N-A-N-O. Oh, capitals. N-A-N-O. Nuclear energy. Yeah, so this is a little different. This was an IPO earlier this year, down the $2 area or so. Pops up to the 37, or pops, it skyrockets to, then it pulls back all the way to the $6 area. Then it runs up again and it goes to 34. Then it pulls back. Now the last pullback was to just under 20. It went to the 19s, and here it is in leg A, brand new leg A in the daily. But if you go to the weekly, it's such a weird chart. Let me show you this. So sometimes you get really weird charts for whatever reason. So this is an IPO back in, this is the weekly chart of NNE is a symbol, trading and nano. There it goes. Makes a low of $3.25. What date? On 5/17/24. So 325. Look at this. It goes 325, runs up all the way to that 37 area, pulls back. I mean, what do I mean pull back? It goes from the threes. It has a tenfold increase. It goes to 37.51. But wait a minute, 37.51, then what would you call a drop to 630? I mean, that's 80-something percent, right? And now it starts a brand new A, B, C, and it needs to go 1 penny above the most recent high of 33.82. 33.83 starts leg D. So that's very interesting. That's a much nicer chart than many of the others. For instance, CCJ, which is really Kamiko Core, which is the boss in this uranium fuel, it has a beautiful monthly chart. Weekly chart has had a bit of a pullback from the 62.55 area down to the fib number. It went to a 50% retracement down the 48s. Now it's running quite nicely. But at the same time, all I can say is it's got a lot of work to do to try to get back to the 56 area. So it's at 52.83. We have UEC, which we've had for quite some time, which is doing very nicely today. It's up 5.5%, up 40 cents of 7.47, but it has had quite a bit of a pullback from just under 9 down to the 6.60. Hey, that's a big drop, but we got it much lower down, so we're really prepared to buy and hold in this particular area. So another, let me just see. Okay, question came in, add to Bitcoin. Let me just see if that's correct there. Add to Bitcoin today. Oh, wait. So I have a problem. Now, this up to me, I haven't gone into it in great detail, but there was a Trump Bitcoin and a Melania Bitcoin. I don't know what that's about. I don't know if that's a conflict of interest. I don't know. Wow. I mean, that's aggressive, right? I can't say there's anything wrong. I don't know if there's anything wrong, but it's a little weird. So I think that if I'm just checking out here, someone might be able to help me. No. So wow. So the question is, should I add to my Bitcoin position? And I would say if you're in a while back, it's trading at 1,003,865. This is going to be a really whippy week. There's a lot of sorting out to do. Today's low, now that would be different. Today's low is 100,425. What I would have said there, if it was at that level, I'd say the weekly chart is so strong that I'm going to recommend that you start a little bit of a position here or add to a little bit of a position. At this particular point, I might miss, tomorrow might be up 3,000, who knows, but I might miss that, and I haven't done that. Look, our iBit, which we're in, this is the iShares of the Bitcoin. We're in at 38.77. It's trading right now at 58. And we're taking just a little bit off. Do we want to add? I missed adding here. We were just so busy that I didn't get into it. Here would have been on that pullback right there. That was on the 16th of January between 57 and 55. Now I'm looking at it. I'm saying we're almost. In other words, I'm saying to you that the speculation now depends on your wherewithal and on your temerity and on your just how cool you can be. I mean, if you put it in right now, Bitcoin, if you're just talking about Bitcoin itself as the futures, that means you have to trade overnight. Anything can happen at 103,935. I would say to you, if you're prepared for risk, why don't we do this? Have a look at, let me just do it on the 120-minute chart. Yeah. If it can get closer to 101, into whatever, you can just put it in, but I don't know how you're going to put a stop in. It's going to have to be thousands as a stop. So this is way more difficult for me. If you were trading the iBit, let's say, which is only, I'm not saying only because the percentage is the same, but it's a huge amount of money. And the gamble is not the same because this one mostly trades during the day. It does. I've seen trades during the evening. iBit at 58.98. I would just say today's low is 58.41. I would just say, using this as an example, let it go underneath Friday's low of 58.26. Now, let me see if there's any relationship that I can give you to. Yeah, I can. So the relationship is that I would just put in a bid at 99.990. Let it just slip under 100,000 for a moment. People will be very upset, and that could trigger the next move to the upside. But I don't know what you're going to do. You've got to figure out what you would do for a stop, because anything you put it in and you get it, you might not even have time to print the stop, so you have to do it all at once. And I wouldn't make the stop. I'd make the stop very tight. And I'm just saying, if you weren't in it up until just recently, now your risk is a little bit more. If it was low, if you've got in a position from 95,000, I'm fine with taking a little bit as a speculative trade. But in the 103,795 area, it's just too much money in the sense that overnight, would I be wanting to see a $10,000 or $20,000 decline? No. All I can say is I would wait for an entry point at least below Friday's low, and you might not get it, but that's the risk. Because the only other thing I could say to you, if it takes out Friday's high of 106,575 and goes to 576, immediately you could grab something. If you're watching it, immediately put in a $1,500, that's nothing, but maybe a $1,500 or $2,000 stop and just ride it and take some money off as it moves up. That's the best thing I can say. I'll be right back. Dow is up almost 300.
This market has turned red, Tigers, and the question we should be asking ourselves is how to position for a potential bear market. Plenty of gains can be made in bull markets, but if we've entered bearish territory, that strategy needs to change. So, how do we pivot so we can see green in the red? Join Larry this month, January 10th and 24th for live trading action. You'll sit next to Larry as he places live trades, explains his methodology, and answers questions live. Larry brings his decades of trading knowledge directly to you, teaching you how to navigate this shifting market. Go to the front page of TFNN.com today and secure your spot fast for live trading Fridays with Larry Pesavento. Happy New Year, Tigers. We'll see you January 10th and 24th. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So everyone's in the den want to know if I have time, could I look at HMY? HMY is Harmony Gold. In fact, I think in South Africa, when I lived as a teenager, I was born in Cape Town, South Africa. Beautiful, beautiful city. Went to a little mining town as a teenager, and I think Harmony was on the Vaal Reef. So I should know better, but it was such a long time ago, I don't remember. But it's acting so well. It's up 59 cents today, $10.36. It was one that I actually had as a potential if I wanted to go into individual stocks rather than the gold that we've got for subscribers. It's acting very, and if you look at the monthly chart, you would never know that it's a $10 stock. It's acting like a $100 stock. Yes. Congratulations. If you do have it, I like it very much. It's got a couple of gaps within stocks that trade overseas. Do that. So just at 10.35 right now, I say if it closed under 9.47 in the next 2 days, that's a problem. But as long as it holds 10 to $9.80, this is acting really nicely. Weekly charts improved a lot. The 9-period moving average hasn't gone above the 14. So, and definitely there were just one or two, maybe a little bit more, the ones that I looked at, gold stars that looked so superior, were acting very, very well, looking more like gold itself. So, okay, the next question was Pelosi's new stock, TEM. How did he know that it's Pelosi? You know, it's a personal thing there, you know, huh? Pelosi's stock is up 38%, up $13.66 at 48.76. Oh, probably bought a lot. All right, well, it's acting very nice, and I didn't see what TEM is, one of the few that I can't. Tempest AI. All right, so as we're going out to we're going to go to Steve Rhodes. Great programming here. Check out my Opening Call Daily newsletter. As I say, we're putting in positions right now. I'm not trying to outfox the fox. I'm just trying to get into positions that say to me, we could be seeing some new areas benefit in the in what's being articulated by Trump.